Hey, Aiman, can you just confirm for everyone that you're not a wizard, that you were able to land that entry right at the low of the wick at 5 times speed? Because that's absolutely unbelievable. I just want to make sure that we point that out in this video.
Hey everyone, Aiman and Simon here, and today we're coming back with a new series for our stock trading simulator homework. Today we'll be talking about how to trade momentum scalps or how to play momentum flips. One of the stocks that I traded yesterday, actually Thursday, was on CCL. Before we go there, please make sure to submit your email around here if you want to receive a weekly simulator homework. We do this on weekly basis. We send homework with potential stocks you can trade twice a week, and we send the links to the videos similar to the videos that we did around here also every Friday. So Simon, why don't you walk us through the bigger time frame and the thought process to how we could trade CCL on this particular day?
Yeah, sounds great, Aiman. So, CCL was something that was on the watch list of both Aiman and I earlier this week, and I'll kind of give you the rundown, I guess, as to why. So, from a high level, Aiman and I always build our bias and kind of our high level trade idea planning, or hypothesis, for lack of a better word, off of the daily or the 30-minute or the 60-minute timeframes, or some kind of combination of all of them. So, taking a look at CCL on the daily chart, you can see the rejection of a major moving average, right? I believe that's the 200 SMA on the daily chart. And then from that point, it's been in a fairly deep sell-off for multiple consecutive days. And what we're looking at is, during these consecutive days of sell-off, you're looking for basically a counter trend play, right? It's going through the 50 SMA, through the 9, through the 20, and then it's actually reaching the point of the swing low previously found on the daily chart around about October 27th, I believe, or October 28th. So, at that swing low, plus the aspect of these consecutive days of selling, plus that lower wick actually closing above the low of that swing low, this basically becomes a great formation for a long bias. And at the end of the day, when we're looking at a long bias like that, we want to derive the initial idea off of the daily chart. We'll take a look to see if there's any confirmations on the 30-minute chart or the 60-minute chart, whichever you trade with. And then from that point, you're essentially managing the position on an execution basis. So looking for, that pinpoint entry, or looking for any momentum plays as well. So looking at the 30-minute chart, though, we can see a level at around, on the 60-minute chart, it's around 2140. On the 30-minute chart there, it's right around 2142. So roughly that 2140 to 2142 area is kind of the important area for us as far as a support level. So if you're going long for this trade, given the daily chart bias, given what we're seeing on the 30-minute chart, you can kind of see a very nice ABCD pattern on the 30-minute chart, holding the moving averages as well as holding that approximate price level, which if you zoom out a little bit, you can kind of see its impact as well on the previous days. You can see a large drop bouncing off of that level, as well as then momentum and a retest of that level again. So it's not just that we're looking at the 3 or 4 candles in the after hours or pre-market data, we're also looking back at previous days for how we're actually selecting the level. So now that we have, our preliminary bias set off the daily chart, we've taken a look at the 30, we've drawn our key level of support or resistance that we want to trade off of. Now we kind of go into, the execution side. So Aiman, maybe I'll hand it back to you. And if you want to go through kind of how you would handle the execution for this, I'd love to see kind of your thought process behind it.
Yeah, thank you, Simon. And Simon walked us through the bigger time frames and what exactly we saw and what exactly we wanted to trade right there. And now let's go to the smaller time frame. Once the plan is already ready, once the plan is built, the levels that you want to play from. All you need to do is wait for the market open and wait for these price levels to be hit. And as you mentioned, the levels that we're interested at are 2142, 2140 for plays. Now what we need to do is wait for the price to drop closer to this level, and I'm playing them initially for bounce, right? The initial plan is to play it for a long of the 2142 or of the 2140. What's our target? Basically my target was the break of the pre-market high or slightly above it, a place where I can get a 7 to 1 or 8 to 1 depending on your potential risk to reward.
Hey, Eamon,
Price
can you
going
just
in.
confirm for everyone that you're not a wizard, that you were able to land that entry right at the low of the wick at 5 times speed? Because that's absolutely unbelievable. I just want to make sure that we point that out in this video.
I'm sorry about that. But yeah, so basically look at this. The price is breaking at this level, and what we need to do at this place is flip our position. That was the initial plan. The initial plan is to play this thing for a long for a bounce. And it's hitting our level, the level that we are interested at. That was, by the way, pure luck that I got at 2142. Normally I'm not getting those good fills. Getting worse fills. Anyway, and the moment we get stopped out, the moment it hits our stop loss, and you could see on the bigger time frames, that's the level we're stopped at, and this is it on the 30-minute chart. This is the level that we're playing the break off for a flip. What's our stop loss? It depends on you, but personally, for what me and Simon use, we use our original entry as a stop. The original entry plan was 7% of the ATR below the stop, so it would be, the original entry could be all the way up here. No matter where you enter between 2140 and 2146, that is a good entry. Now, you could see that this thing is going back down. Some people will be panicking. This is 2143, it's going against me, went in my favor, I need to exit at break even. But take a look at this thing. The 2142 is a retest area. It's the support area. Once it breaks 2142, what you could expect is a pullback into 2142. Previous resistance will act as a support, and then a continuation. And this is exactly what's happening around here. A drop down, a pullback to 2142, could be few cents higher, could be few cents lower. That's why we don't use the exact level as the retest. This is why we are using a range of between 5 to 6 cents to give it some consolidation in it. You can see that this is clearly a retest, so what you could do is add a little bit, and now instead of having your stop loss 2146 after the initial entry or after the initial flip, you could move your stop loss to 2143. After that, all you need to do is just wait for your targets to be filled. Now, as we mentioned, our initial entry was approximately 6 cents, and the most important thing when you are day trading is to have a great risk to reward. So the tightest thing you could go for as a target is at least 18 cents profit, 3 to 1. You could go for 2 to 1. Anything more than 1 to 1 is actually a great target, but I personally prefer going for at least a 3 to 1 on my target, and the 3 to 1 will be at least 18 cents, right? Waiting for it to go to 21.22, which is the 18 cents and which is the 3 to 1. By the way, that would be even more after the add. But let's go for the original target. Let's assume that we didn't add anything, and now we're waiting for the 21.22 for our first partial. You could exit all out at 3 to 1 if you're happy with it, or you could hold on for longer. What will help you make the decision whether you want to hold longer or not is looking at the 5-minute chart. And you could see that on the 5-minute chart, we are having a 3-bar play. One drop, inside bar daily candle, and then a new low. Your stop loss is up here. So you could actually, instead of just scalping this momentum, you could turn this trade into a trend trade and hold it for longer. What will support the longer move? The daily chart. The daily overall is weak. We did expect a bounce, the bounce failed, and it seems that CCL is continuing the downtrend. So what you could do now, since your entry is already good on a flip, since the long position failed, hold on to this last portion of your shares for a longer trade. How long? It depends on you. It depends on the pullback. It doesn't really matter. From now on, you just manage the trade the way you want to manage it. Basically, this is the way I executed my CCL trade. You can check the screenshot of this trade on my Twitter channel. You can also follow Simon. You can see our Twitter handles around here. If you have any questions, feel free to email me or Simon.
Awesome. Well, thanks, guys. And thank you very much, Aiman, also for the stellar walkthrough and your magical entries here at lows and highs that you somehow land at 5 times speed. But regardless, guys, please make sure that you like the video. We'd really appreciate it. Subscribe to the channel. If you have any questions, comments, feel free to comment it below, and Aiman and I will do our best to kind of get back to you and be able to help in any way we can. And as Aiman mentioned, if you have anything that's a little bit more complex as far as a question goes or any feedback for the stock trading simulator, feel free to email both of us direct, and we'd be more than happy to answer. But other than that, guys, trade safe, keep tackling the homework, keep getting in those reps and hours in market replay and in practice, and stay tuned for more weekly homework and more videos just like this one next week. Cheers, everybody.